Should an executive use their funding to develop IP? Hello and welcome back. Coming up, we're going to talk about 9 powerful ways to leverage IP in business by talking about things like controlling competitors, discouraging rivals, market growth, unlocking top-line revenue, even improving your costs, and talking about things like partnership and leverage for M&As and all sorts of monetization vehicles like IPO.
Inventions keep the world spinning. From fire in the wheel to today's high tech, inventions power change. Turn your inventions into reality. Learn how to get your ideas to market. This is Invent Anything with John Cronin.
So today we're going to cover 9 topics. Topic 1 is controlling your competitors. Topic 2 is expanding market growth. Topic 3 is enhancing the top line revenue. Topic 4 is reducing costs. Topic 5 is to leverage your employees. Topic 6 is being smart and being on your guard. Topic 7 is how to get leverage in partnerships. Topic 8 is how to improve the valuation of the company. And finally, topic 9 is how do you maximize the exit potential. And then, of course, we'll wrap up. When I do these podcasts, I'm always thinking about the audience. And this audience is really designed for companies that may have just raised money or have enough funding to even consider developing intellectual property. It's for executives who may be thinking about a new investment in their business where part of it could be for IP. It could be for an audience of board members who want to help guide their executives. Or it could be for investors who want to guide their investment. But it also could be for an audience of those in early stage companies that are trying to consider their budget and lots of things to do. And should IP be part of that? And finally, for those who just want to see a broader view of how to use IP in strategy. So coming up, this is John Cronin from Invent Anything, and we'll discuss in the first set of topics, first 3 key areas: competitive advantage, controlling your competitors, exercising your exclusive rights, strategic licensing, expanding market growth, improving your revenue through premium pricing and things like that, and thinking about all those cross-selling opportunities. So stay tuned. Let's jump right into this. Topic number 1, controlling your competitors. Now, again, we're trying to consider whether you might want to fund IP efforts and IP work. Well, one thing you might not know about is that IP protection helps a company maintain their market advantage, because what it does is it stops those from copying you. If you have IP, patents, or even trade secrets, you're able to put a message out that you want to defend your intellectual property, and that may stop competitors. Another thing that a lot of people don't count on is that they can use intellectual property in their customer pitches and customer decks to talk about that you're the innovator. Another thing we could do is to use strategic IP management to really defer copycats. You see, a lot of copycats will learn about what you do on your websites and through your marketing brochures, etc. But by leveraging IP at key points of that, you can dissuade competitors, even knowing when to say patent pending, or going to market and talking about how you might strengthen and push back using your IP. One of the things is to establish market exclusivity. When you're talking about patents, the patent office is the one that granted your patents. They don't have a dog in the fight. So you're innovative by a really third-party expert group. So you could leverage that for market exclusivity. Because once you own the patents, of course, you can stop others from using and selling. One of the neat things you can do is to actually control create licensing opportunities. So that what you could do is decide which one of your partners in the market or even competitors might license a portion with some of your technology. One of the things is, and this happens a lot, is when you announce that you have IP, if your competitor is trying to raise money, a lot of times the investors find out about a competitor having IP, and they get the jitters that maybe they're investing in a company where they're going to get sued. So a key trick is to announce a lot of IP if you think your investors, your competitors are going to get an investment. Certainly, one of the greatest things about intellectual property and trade secrets and intellectual, patents, etc., is that it really shows your reputation as an innovation leader. And of course, in today's market, innovation is really what sells. products that basically every 3 years are changing, and now changing in every eight to 10 months. So being an innovative leader is really important. And then also using IP in a very strategic way, if you have to, for litigation, where you can protect your rights. So there's a lot of things you could do for competitive advantage. Let's switch to topic 2, which is expanding your market growth. We touched on that a little bit, but how do you use intellectual property to expand your market growth? Well, one thing is that when you get patents and trade secrets, it really does solidify the company's position in their brand as an innovator, and marketing can really leverage that. Another thing for your market is that for companies that might be considered global markets, international IP, maybe getting patents in Europe and in China and in Canada, et cetera, may be very useful because it could discourage competition in those countries, but also it could encourage other global companies that might want to do acquisitions because your intellectual property expands in their global markets. One of the key things about market is brand protection and brand recognition. And intellectual property stops others from copying. But if your trade names and your brand are on top of, what your inventions are about, then you form this really great connection between your brand, your trade names, et cetera, and how they relate to the product and how they relate to the patents. And that trifecta is really how you lock up a market. One of the things is when you want to go into a new geographic market, maybe you have products that are working in the United States, filing patents in the country you're about to go into is a great way of virtualizing ownership in that country where your market is getting kicked off literally by the patents. Another thing you can do for market is to use your IP to help you create strategic relationships and strategic partners. Always, we're working on, we serve about 2,000 clients over the 25, 26 years we've been in business. And a big part of the discussions we get involved in all the time is how can they use IP in starting a negotiation for a partnership. Maybe you do want a vendor or a supplier to be a closer partner, but you want leverage in discussing it or negotiation. So developing IP that you own in their space sometimes helps you do that. If there's a real crowded market, you can use IP to really distinguish yourself in a crowded market because you might have 5 companies working on the same area, but if you have the IP, you have this exclusion to get rid of the other 4 competitors. One of the things about market is being recognized as the first, so being the innovator and the first. Certainly when you have the patent, you can be recognized as being the one who got to the patent office first as the inventor. So brand image is very related to timing as well as, what the value of the brand is. And finally, building a foundation for franchising your technology through licensing helps you improve your market. So if you're going to market and you can service some of your market operationally, but there's a larger part of the market that you can't really get to, you might be able to license to others to expand what your technology and products are through the efforts of others because your IP is the vehicle to allow that licensing to occur. So patents through the use of licensing to expand markets is one of the key reasons to leverage IP. So if you want to grow your market, growing your IP to help you grow the market is the way to do it. Now let's talk about the topic number 3, enhancing top-line revenue. This would get most executives, I think, fired up because we're always, like myself, I've been a CEO of 4 or 5 companies in my life, and I'm always looking at how I can, enhance my top-line revenue. IP provides a lot of optionality for this. For instance, we talked about licensing, but what we didn't talk about is you might be able to license IP in non-core markets. Maybe the claims of your patent can be extrapolated into another part of the market. If you have claims of a particular medical device that has a certain functionality, that claim might be useful, say, in some consumer device that's non-medical, a health device. A nice thing about how you enhance top-line revenue is things like using IP, patents, and trade secrets to really protect your R&D investment, not letting it walk out the door through employees or not letting somebody easily knock it off. So top-line revenue is enhanced by protecting your R&D so that you can own your R&D and the value in the market by selling products where none of it's being stolen. And somebody else can kind of leach in and take a portion of your revenues because they're copying you. One of the things that people don't recognize, executives in particular, don't recognize is that when you have patents, by definition, you should be able to price in a premium in sales. And that premium in a lot of markets is about 34 to 35%. That if you looked at studies for companies that had products that were selling, where other companies had products that were selling where they had patents, there's a difference about a 34% value. Imagine if your top line would go up 34%. That would be tremendous, right? Just through the use of a price premium because you own it. Of course, the market would have to adopt that pricing scheme, but at least you have that opportunity. Another thing about how you can kind of increase your top line revenue is to create upselling or cross-selling through the use of IP. What you could do is you take existing products and find a way to market it in complementary versions or complementary markets using IP as the lever to essentially open those markets. A lot of times people have a product, but they'd like to change it and have a version 2 or version 3, and they want to get value for it. Swapping out version 1 with version 2 is one way to do it, of course. But if you have intellectual property on version 2, you can start talking about version 2 without producing it by getting people to buy version 1, knowing that version 2 is going to be behind it, but not losing the rights to version 2 because you've patented it. Another thing we can do for top-line revenue is to use revenue to the enhancement of having more people, more companies, more partners help you be strategic partners to help you leverage your intellectual property. So if you're developing, top-line revenue, if you had a partner to help you sell, IP would allow you to make sure that through partnerships to help you sell, they couldn't just take the product and run away with it. Another thing is to try to diversify your revenue through creating additional income by, once again, taking the IP and maybe finding a partner that would be willing to take the IP and develop other derivative products from it. We see a lot of this where operationally you can only operationally consume so many products and so much effort. But by licensing some of your IP, you can now get other products to be developed. And sometimes those products could be surrounding your base product to enhance it. And finally, I think that, one of the ways to enhance top-line revenue is using your IP to garner trust with your customers, because you don't want to lose top-line revenue because some customer might want to change to another vendor or another supplier. By you talking about your IP with your customer, they're very likely not to change to another, supplier or vendor. So you can protect your top-line revenue that way. Well, those are 3 interesting things to talk about of whether you should fund your IP or not, right? But coming up, what we're going to do is talk about how to do some different things, like how to reduce cost using strategic IP practices or minimizing legal costs and things like that. We're also going to talk about employee morale and culture and innovation, which is vital to a company. Should you invest in IP? Well, what if I told you it would change your culture to be more innovative? And finally, we'll talk about coming up how you can create more barriers of entry to your business through the development and funding of IP. So stay tuned. So let's get into topic number 4, reducing costs. I know this whole podcast is pitching to executives or talking to executives about, should I invest some of my financing or my capital into IP? And now I'm talking about reducing costs. So it's usually kind of weird to say that invest in something to reduce costs, right? If you were thinking about that operationally, you do it all the time. But a lot of people don't think about investing in IP as reducing costs. So this is a particularly interesting topical area. So first of all, how would you do this? Well, one thing that you could do is there's certain types of IP. One is patents, one is trade secrets. And of course, I think most executives would know patents cost money. Trade secrets don't, but they don't know much about it. If they do it right, it's really good, but it does cost some time and effort and money to invest in a good trade secret program. However, there is a type of intellectual property called defensive or enabled publications. We have a whole podcast on this that you could take a look at. But basically, when you publish an invention, and you can do it anonymously, you stop others from filing patents that overlap it. So one very creative thing you can do, maybe you might be thinking you might need 10 or 15 patents, but sometimes you can patent 2 or 3 things and publish the other 12 things and save a huge amount of money, hundreds of thousands of dollars. So one way to reduce costs is develop IP like publications, because by definition, they're going to cost an awful lot. So you get the same IP protection. I mean, not exactly the same because patents allows you to stop others, but it also means that people can't patent on top of you. Publications is the cheapest way to stop people from patenting on top of you. Another strategy like this is called the patent part, trade secret part. And here, what I'm saying is that sometimes you might have a process that has lots of steps in it. You decide to patent 4 or 5 method inventions. Well, maybe you could patent 2 method inventions and have the rest as trade secrets. And the division there is that trade secrets are those things that you can protect that might not be easily reverse engineered. Where patents on some methods that you want to, own and exclude others and teach. So this is a way of having your cake and eating it too. Basically, patenting a part to stop others from, copying or make, using, or selling, but then having trade secrets to make it really difficult for them to figure out. And this, by the way, is a low-cost way. So instead of patenting everything, you're actually patenting part and holding trade secret apart. Another thing you can do to reduce costs is basically highlighting patents in marketing materials. And here, which is kind of interesting, when you're doing marketing and advertising, there's a budget to that. But you can get a real oomph by talking about your patents and patent pendings and all that, and not have to develop would be as expensive for the marketing materials. So we've seen people trade that off by talking about their patents. The marketing material is done because the patents is issued or applied for and laid open. So think about that to reduce costs in marketing, maybe leveraging your patents more. I mean, sometimes 10 or 15 marketing decks can be replaced by, 1 or 2 marketing decks where we talk about the patents and that ownership. One of the things that is done to reduce costs, and this is kind of a negative reduction, is by having IP ownership, you're very likely minimizing someone else suing you. I can't tell you how costly being sued for patent infringement is, but it's at least $500,000 to the Markman hearing. So by developing IP, you might be saving yourself millions of dollars. Of course, very hard to prove that, I developed the IP so I didn't get sued, right? Because who would not develop their IP to go test to see if you're going to get sued? But you've ever been sued, you know how much it cost. And a lot of times wishing that you had published or patented it, right? So certainly you can reduce costs this way. Another thing you can do to reduce costs is use the patent system to reduce redundancy in R&D. In a well-organized IP portfolio, what happens is you could take the patents and trade secrets, and of course these are technologies and invention, where you could be doing R&D to develop the product or idea. Well, it turns out that when you apply for a patent or go through the process of getting a patent or a trade secret, you're literally virtualizing the R&D. So in some cases, companies will do the R&D on a product and pay for that R&D and develop the product. But in other places, they're just developing the patent, which is far less than R&D on the product, and using that information as what R&D looks like. So it's a way of developing more products virtually, if you will, but not investing in the R&D of all of them. Another thing to reduce cost is optimizing the product development using sort of certain IP techniques. So for example, supposing you're doing manufacturing and you're trying to lower the costs of your manufacturing. Well, you might not recognize, but if you run a brainstorming sessions and come up with new ideas to lower the costs, some of those new ideas might be patentable. So what you've done is kind of reduce costs by using the processes of developing intellectual property to invent lower cost solutions, but the output is going to be patents again or trade secrets. So it's a trick that by developing an IP, by investing in IP, you're investing in people's time to formally brainstorm You're investing in people's time to search out those new ideas to see if they'll work. You're investing time and money to maybe develop an IP on it. But that becomes once again a savings because now what you've done is invented new ways to save cost in manufacturing. And everywhere in your business, you can look to save costs, which means that everywhere in your business, you can invest some money to invent, which might save you $1 million by spending 50K to invest in an IP process to invent in cost savings. Another thing to do to reduce cost is using IP to block competitors' patents. Because if you're developing products and then you have to worry about the patents of competitors, now you have to spend time and money designing around. And that's expensive and costly in time. So by watching competitors' patents and then inventing and blocking competitors' patents by getting patents in their forward direction, now what happens is you've given yourself a sort of direction to develop new intellectual property, but not have to spend the time, inventing around your competitor's IP. So using patents as a way to reducing the heavy cost of falling into the trap of needing your competitor's IP, developing IP to invent around your competitors so you don't need that is very cost savings. And finally, I mentioned this a number of times, but I just want to spend a minute talking about it, that one way to reduce costs is to have a formalized trade secret program to really protect trade secrets. And we have a whole podcast on that you can learn about. But it's things like a trade secret registry and exit interviews and having owners and knowers and knowing how to be creative about protecting trade secrets. By doing a good job of protecting trade secrets, which is very low cost, you might not have to file lots of patents. So there are some tips. There are many more, but using your investment to develop IP to reduce costs is certainly very valuable, and it's done all the time. So hopefully this gives you some indication of that direction. But why don't we move on to topic number 5, which is to talk about employees, particularly how to leverage them. So one thing about employees is they generate a lot of knowledge and ideas. So through patents, trade secrets, NDAs, and all the rest, you're turning those ideas into proprietary information that you, the company, owns. So that's very important, is you might as well capture employees' ideas because you own them while they work for you. Another thing is you can use intellectual property investment to form problem-solving teams and use creativity tools to start to lead new innovation processes or invention processes to create new ideas, to create new IP. So by doing this, you're leveraging the employees' thinking. So not only are you capturing what they had, you're now investing in time to help them develop new stuff in a very formal way to help them develop new IP. So it's a great way to leverage employees. The other thing about intellectual property, by investing in it, that we have found 100% of the time is when your employees are starting to get invested in filing patents with their name on it, there's some personal, gratitude that they have a patent with their name on it that you help them get. So the culture of innovation for employee morale goes up. Another thing is not only the morale goes up, but you could double down on this by adding a little bit of time and effort and money on having formal recognition. This could be as easy as a dinner out for the partner and the inventor, or it could be through more formalized, plaques or meetings to say thank you. There's many ways to recognize employees, very low cost, but it really leverages employee morale. Another way to think about employees is to have a structured pathway for IP development. Employees are coming up with ideas all the time. Most companies are spending time trying to make money, increasing top line, getting the product out, reducing costs. But if you had a formalized process, like every board meeting where you report on, at least I do, and most CEOs I know do, report on their net income statement, their revenues and their costs. Well, what if every board meeting? So another thing we can do to leverage employees is basically making sure you collect the intellectual property, either through patents, publications, or trade secrets from the employees, and doing it before they leave, because companies have employee turnover. It'd be very sad to see an employee leave, of course. What's even worse is they leave with your inventions, and then some other competitor gets it. So one good reason to invest in IP is to protect your future by making sure that you own what's inside your employees' heads. And finally, another thing we can do to leverage employees is to use some cross-functional efforts to take employees from different work areas and having them work together, because the definition of creativity is new and useful, but that a lot of times comes by having new people work with each other. So we do know many companies that have formal rotations of their employees through their company. So it could be as easy as having someone in manufacturing that's working to be working at some part in R&D and vice versa, maybe 10% of their time. If you have a small company and there's 20 employees, just mixing up employees to have one help another in a special project, they learn a lot. So leveraging employees is really through their thinking and their ideas, leveraging their aspirations, leveraging how they work together, leveraging their culture, leveraging your ownership of what you own because you're paying them to work for you. So there's a lot of ways to leverage employees. Let's go to topic number 6, which is a kind of different area. It's saying be smart and be on guard. Now, in this set of topical areas, we're going to talk about things like creating patents as a way of having a barrier for entry. When you have a patent, you can stop others from making, using, or selling in the market in the country that the patent is issued in. So here, by having patents and telling the market about it, telling your customers, telling competitors, it's like a big stop sign. So that's a great barrier. It's a really good way to kind of be smart and be on guard. But another thing is that a lot of companies don't recognize that a lot of the internal know-how, their processes and methods could be protected through patents or at least through trade secrets. So be on guard. Invest in trade secret programs and patents so that you don't lose rights. Another thing that companies do is they'll invest in a free and operate study. Again, you can go to our Invent Anything series and look up the podcast on free and operate, but it's a formalized method to see if your product elements, whether it's a recipe or whether it's an apparatus or whatever it is, can be checked against the patent literature to see if you're violating someone's patents. It would be a shame to spend time, R&D effort, to develop a product or service, then to find out you get a knock on the door because you violated somebody's patent. Look, investing in free and operate is very minimal in comparison to someone knocking on your door with you having a legal problem. And maybe you don't get sued, but you have to take the product off the market. And all these things are costly. Another thing we can do to sort of be on guard is to conduct regular IP audits, to extract ideas out from people, to look at the patent literature, to combine those two things, to try to figure out basically where your strength and weakness is. So investing in some measurement of the gaps and the risks associated with what you're doing versus the outside world could be very valuable. Now, many times you might need an external consultant or some company to help you with that, but many times the cost is nominal. So investing in that would really help your business strategy, your technical strategy, etc. One of the things that companies do to be on guard is they start to develop IP for defensive reasons, not just offensive. Offensive means I'm developing IP, maybe some patents to stop you legally by stopping you through infringement. But you could literally develop IP to preempt competitors, to get in front of them, to have trading cards. You could develop IP in your customer space to help you sell. You see, you can develop products and services and develop IP on that, but the same process allows you to forecast inventing on top of your competitors or around your competitors or in front of them. Same with your customers, same with your suppliers. It's the same process, but you can use it to really get your guard up by being much more defensive. You know, just like in war, you have an offense and a defense. Why not use IP for defense as well? Another thing you can do to be on guard is to monitor competitors' IP to figure out what they're doing. It doesn't take much time or effort, but I would say that every 6 months to a year, look at your top 10 competitors and finding out what they're doing from an IP perspective makes a lot of sense. Many times hiring a professional group to do some competitive analytics would make total sense. Another thing you can do to be on guard is to build really a layered IP protection strategy. We talked about patents. That could be one level, but maybe some layers of some patents are defensive, some are offensive. That could be another level. You can have some patents that are defensive and offensive, but some could be for your partners, some could be for your customers, some could be for your vendors. That's another level. Well, you could have not only patents, but you could have trade secrets against those things. That could be another level. You could have defensive publications. or offensive publications, using publications to stop others from patenting. That's another layer. I could talk all day long about different layers of IP protection and the strategy, but in this little bit of time, I just want to say that one of the things you could do to build your IP portfolio and be on guard is to think about it in a little bit more sophisticated way. Instead of checkers, it's a little bit more like chess. So sometimes getting some help with an IP strategy, and you can listen to a number of podcasts we have on that, would be very useful to help you decide to invest in IP. Why not invest some time in sort of a layered IP strategy? And finally, the last thing to talk about here in investing in IP is to sort of think about IP surveillance across your business space, doing like surveillance of every year, maybe doing a free to operate. If you have IP, doing evidence of use. If you're developing some new technology roadmap to include patent mapping or patent landscaping in that, or if you're trying to kind of follow key companies or key members, you can easily follow them in the patent literature as well. Sometimes following key members, watching them co-invent with other members, you can find they're really like an ontology of, a mentor inventor working with other folks who they become very, very powerful inventors themselves. We've seen a lot of this. So over the course of a decade or two, most companies are in business this long, right? You can follow this mentorship of what the key inventors are doing and who they're teaching and who then becomes the key inventors. So boy, there's a lot of ways to be on guard and investing in IP so that you can have a more defensive and robust company. So we're going to go on, and coming up, we're going to look at three powerful ways to leverage IP: getting leverage with partnerships. We're going to talk about how to improve the company's valuation, and we're going to talk about things like how to improve your balance sheet and things like that. But then we're going to talk about the final thing, which is how to prepare for and really enhance coming up merger acquisition, which is an exit, or an IPO, which is an exit, or even using it as a raise for another round. So stay tuned. So I'd like to discuss topic number 7, getting leverage in partnerships. So once again, if you're an executive and you're trying to decide, should you put any money or any funding or any financing into IP effort? We've covered 6 topics already. If that's not convincing, here's 3 more, and one of them is leveraging partnerships. If you're any kind of company with any kind of funding, you can always leverage a company through partnerships. Doing it alone is slower, harder, and more lonely, that's for sure. So let's think about partnerships and how we can use IP to leverage it. So the first thing to note is if you have a strong IP portfolio, that allows you much more easily to negotiate your partnership and get a better result for yourself. Look, if you have IP and they don't, you can leverage that all day long. If you have IP and they have IP, understanding the difference, at least you're in par. But if you're good negotiating, you have better IP, well, you believe you do, you shouldn't negotiate that. Remember, IP means that you can stop somebody else from making, using, or selling in the country you have the patents in. But don't forget, you can also leverage trade secrets in partnerships. A lot of companies will want to partner with you because they need to get access to the things that they can't figure out that you can do for them. So leverage is a great one. Another thing you can do for getting leverage of partnerships is using IP to attract the partner. I've seen time and time again companies calling me to say, look, we just got a call from some company. They call us because they want to work with us, and they found us through the patent literature. They saw we had some patents on something they thought was very interesting that they could work with us. So just the patent system alone, for some companies that search patents, is like a marketing tool. So, but on the other hand, if you have patents, you can put press releases out about the patents and the technology, and that might attract partners. Sometimes you might systematically try 10 or 15 companies that you might want to partner with, but using IP is one of those leverages to say, we'd like to partner with you and we have the IP. So there's so many different ways to leverage intellectual property in partnerships. Another thing that you can do is you can boost the company's valuation discussions in partnerships. So your company is generally, when a company gets acquired, it's usually 2-3x revenue or 10 or 15x EBITDA. But what we found is if you have patents, then that valuation goes up, sometimes 10x, 20x, 30x on revenues or EBITDA. So basically, you can use IP to raise your valuation. We're going to talk a lot about that in the last part, but to leverage partnerships, a lot of times partnerships are about equity trades and stock. So leveraging the fact that you have the IP means you can leverage your valuation in those discussions. One of the things about what we could do with IP for leveraging partners is you have the ability to leverage higher quality partners. Sometimes you want to get something done, you might not even think about one of the top brands working with you. But I've seen many times top brands wanting to work with smaller companies because they have IP. Large companies, by the way, feel more protected with smaller companies if the small company has IP, because they now feel like they won't have this knock on the door, large company, from the smaller company who's now claiming you stole our IP. So I know a lot of large companies that won't even work with the small company unless they have their IP together. And a big part of our business is companies coming to us saying we need to develop IP quickly because we have an engagement with the large company as a partner, and they want to make sure we've squared away our IP first. So boy, if that wasn't a reason to invest in IP, nothing is. One of the things to think about investing in IP and leveraging partners is creating IP for a foundation for things like joint ventures and R&D collaboration. This sounds a little bit like I talked about before, but I want to be specific about R&D and joint ventures. Sometimes you have a partnership that's about marketing or supply or customer, but very specifically, sometimes you have partnership relationships around R&D or joint ventures around technology. This is where IP is absolutely essential. We have a number of podcasts and papers on this, but thinking about what you do before, during, and after for your patents, trade secrets, and enabled publications in a partnership or a JV that has to do with technology, it's vital. So investing some effort into understanding the foundation behind what you're going to do with your partner before, during, and after is vital. If you don't do this, what's going to happen is at some point through the venture, someone's going to claim they own stuff, and you don't believe it, or you debate it, and you really wish you had done your homework on this. So investing in IP prior to some JV or R&D collaboration is absolutely vital. One of the things about IP for partnership is you can now use IP to create licenses and cross licenses. So now you can basically go out and license what you're doing to others, and then you can maybe take a license back for what they're doing, and using IP as a contractual leverage between the companies. So it's really a very useful tool in the legalities of partnerships. And finally, one of the things about IP, think about investing in IP for this. Supposing you have a plan, we want to grow the company, but you need future partners. Well, you can start brainstorming developing IP right now in the domain of those future partners, so that virtually you now have a position against or with that partner. So when you get to that partner, you already have the IP position. So instead of thinking about IP as you got it, what do you do with it? Think about it the other way around. I can develop IP anywhere. So what should I do with it? Well, let's move on to topic number 8, enhancing company valuation. Now, in my firm, IP Capital, we do 2 or 3 valuations a month and been doing that for a number of decades. So we're always looking at portfolios, valuing them. And we have podcasts on how to do valuation. But here, what I want to talk about is how, if you're an executive with some financing or some money where you're thinking about investing in IP, why not invest in IP that's going to improve the company's valuation? Okay. So the first thing is just a check mark. IP is a very critical asset in valuation, as I mentioned, and there's a lot of studies. If you look at the value of an M&A on the y-axis versus the number of patents in an x-axis, and you fill that plot up with numbers of deals, you'll find out that valuation starts to hockey stick up around 10 or 15 patents. So basically, valuation is strongly dependent upon intellectual property. As a matter of fact, this total makes sense. As if you want to do deals in your space, there's books that are, that you can buy that basically size businesses, and they'll tell you the size and how many employees and types of markets and revenues, and they'll show you the average acquiring is 2, 3, 4x. But then they'll show you acquisitions that are occurring out there at 10, 15, 20x. Well, how do you get to that? Well, the only way you're doing that is you must have something greater than 3x your revenue. And that's intangible assets. Things like trade secrets and brands and contracts and employees and IP and all that. So this intangible assets is really worth today 80% of a company. And if you don't have good IP, you're not going to be proving very much to any acquirer that you have good intangible assets. So strictly speaking, this intangible asset, particularly through patents, is a great reason for investing in IP to improve your valuation. One of the things about valuation is that IP certainly helps for market protection, right? So basically, if you want to look at the market and forecast it over 5, 10 years, it's pretty hard to forecast what your competitors will do in that time. But if you have IP, you can make the case that I can forecast it with really, uh, impunity because no one can get in my market. Another thing is that IP increases the valuation because it makes you more attractive to be acquired. It's almost common sense that if you want to improve your valuation, well, you should improve the interest in attractiveness of being acquired. And IP certainly does that. As a matter of fact, sometimes IP is the very basis by which someone will knock on your door for an acquisition. So using IP as the reason why you're attractive to acquire should enhance your company's valuation versus not having any value to that acquirer because they don't need you. Another thing to improve valuation is contributing to tangible assets to the balance sheet. Well, if you happen to have patents that you're licensing, that's an income stream. If you have patents in your assets, those can be valued and they could be part of your balance sheet. So you can improve valuation uh, directly. Although I would say that valuing patents is no gap kind of certified method to take patents and turn them into real numbers on a balance sheet and to be able to really through auditors, convince them thoroughly. But we've seen many auditors convinced about the value of IP, allowing it to be put on the balance sheet, as long as they see some plan to get value out. And therefore, a licensing program tends to do that. So many times getting the value out of IP on a balance sheet is to prove its value through evaluation, but then having a model at least behind it of how you get the value out. One of the cool things about improving valuation is that patents give you the access for future markets, right? So you can forecast your revenue streams, but you can forecast new revenue streams for new patents. So you're basically having the ability now to forecast new revenue streams, and that ought to help improve your valuation. Obviously, when you're talking to investors and they have a valuation, they're looking at your revenue streams. But if you could say, hey, in Q4, we're going to have another product, and here are the patents for that product. So we want to add that revenue stream to our income statement. Sometimes investors would allow that because they buy off on the fact that you have the patents on that revenue stream. One of the things that also helps with valuation is because you have exclusivity through the patents, you can really pump in the value of your market sort of innovation and your market leadership. And so in a conservative way, you could talk about valuation, forecasting revenues, and maybe adding IP, but now adding the subjective discussions about leadership in the market helps to convince those that want to give you that value that you're the right company. And finally, one of the last things about valuation is reducing the risk to investors. Do they want to put a high value on you or not? If you're a high risk of going out of business, they're certainly not going to give you high value. If you're a high risk of being sued, they're certainly not going to want to give you a high value. If you're at a high risk of being copied, they're certainly not going to give you a high valuation. Patents give you a way to eliminate risk, right? To be around for a very long time and to stop competitors. So you can use, once again, IP as a defensive mechanism with investors to show valuation. Boy, there's a lot there. So the last thing I'm going to touch, if you're an executive with the ability to finance some IP effort, let's talk about topic number 9, which is the exit. I talked about before that there's a definite multiplier of revenues from 3x up to even 200x because of IP. We've also talked about the same for EBITDA. We've also talked about how you can use IP to have investors see the potential improvement of revenue streams and giving you market exclusivity. That certainly would help with an acquisition where you want to improve in the acquisition the forecasting of your business. Another thing about IP you could do is to show how IP can help their business, because your IP in your market with your brand is one thing, but IP in your acquirer's market, in their global brand, in their global market is a whole other thing. One of the things is essential for an M&A or an IPO for executives to understand that a strong IP portfolio could allow you to get great financial returns and an exit by showing that your ownership is, pretty commanding. And in the public market, to show that the ownership through patents, retail investors read patents and at least get a value to that. So whether it's retail investors in a public market, IPO, or whether it's an acquirer, one of the key things acquirers would do is look at your patents to see if they can invent around it. So if you have a robust portfolio that makes it difficult to invent around, then acquirers would tend to, give you a higher valuation. One of the things about improving, your M&A or IPO is positioning it that you are an IP company. Because when you start talking about you are an IP company, it's a different discussion than talking about you're a product company with the return on sales. So the idea of having IP in valuable markets and being able to tell your IP story is really important. Again, we have podcasts on how to tell your IP story. So positioning in an M&A or an IPO, your IP in an IP story, communicating that value is vital. And then another thing you can do is to establish sort of IP for your future growth. And that ought to improve valuation discussions, but also improve the ability for you to improve your M&A or an IPO. One of the greatest things you can do is to develop IP in the direction of the M&A. So if you knew that you were going to be acquired, and generally the companies that might acquire you are going to have other products as well as your product. If you could take your product and show how it overlaps other products of the acquirer and do that through IP, now you have the way of virtually using IP to show that your patents and your product covering your patents, but these other patents can cover the overlap of your technology in other technologies. So if you have a company that has a non-invasive RF device for a particular, thing you're measuring in the human body, showing that it's a platform technology for all those other areas of markets that the global acquirer might want is an incredibly valuable thing to do. Another thing that IP does is it helps you attract strategic buyers with premium offers. Companies do just acquire companies as roll-ups. I wouldn't call that strategic. It's strategic because they're trying to roll up revenues. If you have IP, you're going to move to a different level of acquisition. You're going to move to strategic acquisitions. And in strategic acquisitions, the multipliers are really high. And your IP really is the foundation to say why you're exclusive. And therefore, you're not just a roll-up. You're more of a strategic acquisition. I mentioned IP story and IP valuation. And let me just end by saying these two things come together. So by forecasting your IP and doing a valuation of it and then doing an IP story is a way to put the whole thing together. So let me wrap up. In topic number 1, I talked about controlling your competitors. Talk about all sorts of things, how to control your competitors, stopping copycats, building portfolios, reducing litigation risks, improving your reputation as an innovator. In topic number 2, we talked about expanding market growth. And here we talked about how your IP can help you in international markets, maybe, at least not having the products in that market, but getting the patents in it. And we talked about strategic partnerships and facilitating that. And we talked about things like licensing and franchising models. In topic number 3, we talked about enhancing revenue. Look, we can have all sorts of new revenue streams from new patents that turn into licensing revenues or could turn into new products. We talk about strong portfolio opening up partnerships and strategic arrangements for new revenues. In topic number 4, we talked about reducing costs. Who would have thought? But investing in IP may mean that you're investing in reducing costs. We talked about a number of ways reducing costs by using publications or patent part, trade secret part. But we also talked about ways to use the principles of IP, inventing and creating IP, as a virtual exercise to do things like reducing cost in manufacturing. We also covered off at topic number 5, leveraging employees, whether it's improving their morale or making sure you capture their ideas. By leveraging employees is a powerful way to essentially get a lot of value out of investing in IP. In topic number 6, we talked about being on guard, how to build a fortress to stop others from copying you, but also talk about all those other things like freedom to operate. We're talking about things like developing strategic insights and IP around potential joint ventures. So be smart and be on guard. We also talked about how to leverage in partnerships, how to basically get favorable terms in your partnerships, how to set yourself up for M&A and IPO. And we talked about how when you're doing joint ventures for R&D, That is absolutely the vital place to make sure you get your IP in order. At topic number 3, we started talking about valuation. All the way through this, investing in IP should seem like a no-brainer because the return on investment of 50, 100, 200K to raise your value by tens of millions should make total sense. But having IP in an acquisition, it's totally proven that the number of IPs that you have should be related to the M&A value. And finally, we ended up by talking about how to prepare yourself for that exit, either M&A and IPO. Now, the simple fact of IP is the reason why you'd be a strategic investment versus just a roll-up. It's the reason why you can have higher multiples because your IP in there on the markets of the acquirer can grow their markets. You might not be in those markets, but your IP certainly allows you to be in those markets. So there's a lot here as an investor or as an executive to think about leveraging your IP, investing in your IP to help your business. So I hope you've liked this. If you like it, please subscribe and come join our blog, Invent Anything, or come and listen to our new series, Inventors at Work. But whatever, we just hope that if you're thinking about financing in the IP area, we hope that this gave you a great running checklist of a number of points as to reasons why. So have a great day, and thanks for listening. This is John Cronin.